So we are going to get started today. So how to know if your local market can actually make you more money. A lot of people struggle with this, and I'm going to be talking about what you should be looking for, how to know exactly, not based on what you think, but how to know exactly where you should be marketing, and how to know that the deals that you will find in that area will make you money. So before you chase houses, you have to score your market. This is one of the things that's undervalued in real estate. Most people don't do. Most people are just happy to start doing deals. They learn the process, they learn something about real estate. Now they want to rush and start doing deals or getting into deals. You have to score your market first. How do you know your market is good for finding deals? How do you know you're going to make money in your market? It's not luck. This business, real estate, this business is a math problem. It is a math problem. And the sooner you learn that it's a math problem and learn what the numbers are, the sooner you can almost guarantee that you will make money. I'm going to show you that tonight. So follow along. So, how do we score our market? What does it mean to score your market? Let's go into that. A good quick turn real estate deal doesn't focus on a motivated seller. So, if you don't know, I'll give you a quick synopsis of quick turn. What quick turn actually is quick turn is buying and selling real estate without fixing it up, without putting a bunch of money into it. Most of the time, we don't even see the property. We don't physically see it. It is not wholesaling. We actually buy the property and we own it, and then we immediately turn around and sell it. Now, we've got a couple of ways to do that, but I'm going to go around. Before you do any of that stuff, you have to know where you're buying. And a good real estate deal, a good quick turn deal, does not focus on a motivated seller. Now, I'm sure a lot of you have heard the whole term of find motivated sellers. If you can find a motivated seller, you'll make money. I challenge that. Instead, we look for equity in areas that are ripe for selling, and then we find people that are motivated in those areas. So we go in reverse. We find equity first, then we find motivation. Okay. Finding the right zip codes to buy in gives you better price points. So you're going to get properties that are in the price point you want, better exits, meaning you'll be able to get out of them easier, and better funding conversations. So it's going to be easier to fund those deals. This one process, if you do nothing else, can make your business that much easier. So follow along. Today, we'll look at your market like a deal factory, not a guessing game. That is the most dangerous thing you can do in this. I do not want you to look at your market as a guessing game. If you do that, you're going to lose because you're going to guess wrong. Let's take the guess out of it. We're going to focus on market first, deal second, because that's going to make sure every deal that comes across our desk is a solid deal. That's one reason quick turn is different, because we start at a much higher level than everybody else. A lot of people, what they do is they go to their realtor and they say, hey, where are the hot markets? Where are people buying at? Where are people, selling at? You don't want to do that. That's their opinion. You don't know if your realtor is right. You don't know if they're wrong. They're guessing. Let's take that out and focus on the math. Okay. So, first of all, why listen to us? Who are we and why should you listen to us? So, I'm going to talk to you about who we are. My name is Art, and along with my wife, Aisha, we have been doing real estate for over 25 years. We are full time investors. We don't have another business. We don't do something else. This is all that we do in our business. We buy and sell real estate. We help everyday people understand a specific real estate strategy without a lot of guru fluff. I don't teach you 16 different ways to make money in real estate. Nothing wrong with that. I'm sure there's some people that do it and do a great job. We teach you one specific way, because if you've ever done real estate, it's hard enough to do one way, let alone learning 16. I'm going to show you one way that makes sense, and it's, in my opinion, one of the most stress-free ways to do it. Okay. We bring 25 plus years in real estate investing. We've been doing this for over 25 years. Deal structuring. We've structured all kinds of deals, from single family to 2 flats, 4 flats, to apartment complexes, to mobile home parks, to self-storage units, to strip malls. We've done a lot of different stuff. And we've done that over 25 years. Our strategy that we talk about and teach is called quick turn. It is the process of buying and selling a house without fixing it up, without doing major repair to it. You don't have to deal with tenants most of the time, at least not for a long time, even if you do have to deal with them. And you don't have to deal with contractors and fixing it up and listening to all their stories about why they couldn't get there at 3 o'clock when they promised they would. Okay. Quick turn is different. You learn to buy, control, and exit real property fast. It is not wholesaling contracts. That is not what we do. I just got off calls today with several investors, and they literally said their goal is to own a bunch of doors. They want to own a bunch of rental property, own a bunch of doors, and they just thought that was a great business. I've been a landlord for several years, almost 20 years. I was a landlord. I got out of my properties. I took them on and took them off. I got out of them a while ago. Being a landlord is not all that it's cracked up to be. And it is not a great business model. It's not a get wealthy business model. It's a long term build wealth over time business model with a lot of stress. But there are other ways to do that and not stress nearly as much. Okay. Tonight, we'll show you how to judge your market before you waste months chasing the wrong houses. And that's what a lot of people do. I'm going to show you how not to do that. Okay, so this is going to be a little bit more in depth than what you're used to. So stick with me. If you have questions, ask at the end of the call and make sure that you just say, hey, I didn't understand this part. I got a question. And then we'll get you in and get you going. Okay. All right. The goal is to help you see your market with investor eyes, not look at it from what you want, but what it actually can do for you. Okay. So let's get going. So, why most new investors waste time? Not every area is built for fast, quick term profit. I say all the time, you can do this anywhere in the country, but that does not mean you can do this everywhere in the country. Does that make sense? There are some markets or not markets, but some areas in your market, in my market as well, that it does not make sense to do this. So let's talk about that for a second. One, if the area is too expensive, if it's too expensive, the entry price is too high for a clean spread, it's going to cost you too much to get in, cost you too much to get out. It might not be the right market for you, and we're going to filter those properties out. Number two, it's too slow. That means buyers move slowly, so the exit drags out. It might not be moving a lot of property in your area, and so it's not, or in that particular zip code, it does not make sense to go there. You don't want to waste your time there. It could be great deals, but if it takes you too long, it's going to defeat the purpose anyway. You're not going to make money. It could be too little demand. Maybe not enough in buyers, the people that are going to buy it to live in it or rent it out or whatever they're going to do. There's not enough in buyers in that property for the property type that you're looking for. Now, that doesn't mean that this area doesn't have real estate deals. Just for what we're doing, the real estate deals aren't right. And why would we want to spend time in a place where it doesn't make sense for us to do these deals? The fourth one is wrong inventory. Too many rehabs, too many luxury homes, or oddball houses. I had a house that we did an oddball house, and the house had a really big living room, and then it had a really narrow kitchen that sat right behind the living room, and then it had a door. It had an opening for the to walk through to the kitchen, but then it also had a door next to the opening. It made no sense whatsoever. It was an oddball house. We still sold it and we made a pretty good profit on it, but we priced it because we knew it was an oddball house early. But you don't want to do that as the norm. You want to avoid those if you can. The question is not just, can I find a house? That's what everybody asks. The better question is, can this market support this strategy? Because you're going to be doing multiple properties at a time. You're not going to be doing just one deal, finish that deal, then go do the next deal. Okay? So let's talk about the local market profitability scorecard. Because remember, I said in the beginning of this, you have to score your neighborhoods and your market and know what makes sense. Here's a simple filter for deciding where to focus. I'm going to explain this to you in just a second. Number one is price point. Can you buy at a number that leaves room for profit? If you've got to buy, so a lot of my students that are in California, they struggle with this because their price point could be $1 million and they don't want to spend $1 million to make a $150,000 profit. Now I know what you're saying. 150,000 is great, but if you got to put up the funding and the resources to do $1 million deal, it's not going to make you that much money. You get more bang for your buck in other places. So price point is the first thing that you want to filter for when you're looking at your areas. What's next? The next thing up is buyer demand. We want to focus, are there enough people who want that type of home? Buyers, people that actually want that type of home in that area. That makes a big difference. Why would we buy in an area where nobody else wants to buy? I don't care how great the deals are, because ultimately we're going to want to sell them. So why would we buy in an area unless there's good demand? And then number three is the equity and the situation. Are there owners with equity and a reason to move? We don't need to look for their motivation. People have all kinds of reasons for selling their property, but we need to focus that they have equity, and there's a mathematical way to find out if there's enough people with the situation in an area, and we use that to figure out if there's enough deals that make sense in an area. If a zip code fails the scorecard, you may need a different area, not more hustle. I don't want you thinking, oh, it's just me. I'm not, you know how gurus and everybody will tell you, you just got to focus more and work harder and you're not doing it well. That's not the case. Sometimes the math is working against you. Why swim upstream when you don't have to? There's easier ways, and this is a way to figure out if you're doing it the hard way. Okay. So let's talk about these. Factor number one, the right price point. What does that mean, and how do we figure it out? The numbers have to leave room for the move. Okay. They have to leave room. So here's what we want to look for: houses priced where everyday buyers can actually purchase. Look at so I'll give you kind of an example of this. If the average income in this area is, let's say, $80,000, the median income, and then their houses are priced at 340,000, what does that tell you? That tells you that there's going to either be a bunch of renters in that area, or that there's not going to be a lot of movement because they've got them where they bought those properties a long time ago and the market was much lower, and now they've gone up and they're not going to move until they absolutely want to get out of that area. Enough spread between purchase price and resale price. We don't have to get all the equity, but they have to have enough equity that there's a spread between the purchase price and what we're going to resell it. Because other than that, we're going to have to create the equity or create the value. That means fixing it up or renting it out over time. And we don't want to do that. We want to just negotiate some of the equity that they already have in the property. Does that make sense? Are you guys following along? Can you see this okay? I know there's a few people in here, and we started a little bit off because I messed up with the text messages, but just give me a thumbs up. Let me know if you can see this and this is making sense so far, so I know that I'm not speaking and then I find out my microphone wasn't on. So just let me know in the chat. Number three, properties that do not need a massive rehab to be sellable. I don't want to do a massive rehab. I don't want property where I'm going to have to do this major purchase and fix up and have contractors come over. We can find properties that don't need major rehab. A lot of the properties we buy are in great shape, great areas. They're rented out, or they're ready to move in. They don't have to be falling apart to be successful. Okay. Here's the quick turn difference. Here's some of the stuff that matters to us. Number one, you are not hunting for the cheapest house. That is a big mistake a lot of investors make. They just think cheap means deal. Cheap could just mean bad area. Cheap could just mean falling apart. Cheap is not what we want to identify first when we're doing a deal. That will actually hurt you. Number two, you are hunting for a house that can be bought, controlled, and resold with a clear path to profit. If I have to do a lot of thinking of how I'm going to make money on this property, it's probably not the deal for me. So, for example, if I find a property, it's worth fixed up or in good condition, or right now it's worth, let's say, $250,000. And I know I can buy it, or based on the numbers, I can buy it for, let's say, $180,000. There's not a really hard problem for me to figure out as far as how to make money from that property. I'm going to buy it for 180 and sell it for 250 or whatever I can get and move on. Does that make sense? It's not hard. Now, if you got to figure out, oh, well, maybe I can rent it out. Maybe I can do this. Maybe I can do an Airbnb. If you've got to do that much thinking to figure out how to make a profit, maybe you shouldn't do it, because if anything goes wrong, you're in trouble. Factor number two, who is this that put the line? Factor number two, enough buyer demand. Is there enough buyer demand? The exit has to be waiting before you make the offer. Otherwise, you won't have confidence in your offer, okay? It's going to allow you to build your business. So let's talk about that. Are homes selling in that zip code? Or do you actually see home sales? Are days on market reasonable? How many days is a house, when it gets listed for sale, on average, how many days are they sitting on the market? Do you get how this would matter to you as an investor buying in that area? How many days are they sitting on market? Are buyers active at that price point? It's one thing to have buyers, but if all the buyers are buying the $400,000 houses and you want to sell a $200,000 house, is that going to sell? Are there active buyers at that price point? Maybe there's a bunch of buyers at the 200,000 and not a lot at the 400,000. That lets you know that's where you should be at. Are similar homes moving without heavy discounts? Yes, you can find out how not just that they're selling, but are they giving a big discount? You know how they ask for seller concessions and all that kind of stuff? If they're asking for big discounts, that actually affects what they're actually selling for. And we can find that out through math, and systematically, we can actually get that data and see if properties are selling with a big discount. And if they are, that doesn't mean we can't do that area. We just have to have clear numbers of this is what's reasonable in that area. A deal is only fast if the exit is realistic. Okay. If you don't know how you're getting rid of it, it is not going to be a fast deal, because you got to figure it out. Then you got to execute on it. And then you got to hope your theory was right. We're going to take all of that out by using math. Okay. Factor number three, equity and owner situations. Let's talk about that. Property owners with long ownership and equity can create better quick turn opportunities. People that have owned their house for a while, a lot of times did you know that the average homeowner or the person that lives in a house, the average lifetime that they live in a house is about 4 years. That's on average across the United States. About 4 years that the average person stays in the house. So if it's been less than 4 years, we probably don't want to talk to them. If it's been more than 4 years, there's a good chance they've at least considered moving, and we probably might be able to find an opportunity there. So these are some green light owner profiles. Okay. These are kind of profiles that we look for. Number one, they own the property for many years. That's a plus if they've owned it for a long time. Number two, built up equity over time. They didn't refinance all the equity out of the property. They actually stayed there and kept their mortgage or whatever and paid down their mortgage. And so we know that they built up equity over time. Number three, the home is livable, but not freshly remodeled. Did you know there's a way to collect the data on how many homes in the area or the homes in the area that are livable, but they're not remodeled? They haven't had a remodel in the last 2 or 3 years. That is a good buyer because they don't see that their value has increased. They haven't put a lot of money into it. Number four, may value speed, certainty, and simplicity. What I mean by that is the seller wants speed or they want certainty. They want to know that it's going to be sold. When I put this under contract and sell it, it's going to be sold. That's one of the things that they don't get with wholesalers. And I've had a lot of wholesalers that have had deals fall through, and those sellers that they left in the dirt will call me and end up selling me the property at a lower number because I'm going to close them out and I can assure them that they're going to deal with me. I'm not going to try to pass them off to somebody else. So some people, that certainty is very important. And the other thing is simplicity. When they got to list it through a realtor and let all these people walk through their house and they got to show the house and make sure it's clean at 7 o'clock. And then they got to be someplace at 7, but they got to be there to show the house. They want simplicity. I can buy your house. Let's get on a phone call. We'll negotiate it out. And at the end of the day, I'll make you an offer. You can accept it and we can close quickly. We don't have to send 30 people to go through your house. It's simple. People value that. Okay. All of these are profiles, and you can find out this kind of information through data. I've literally have a process to get this information through data. Now, what's a harder fit? So let's talk about that. A harder fit is it was recently remodeled by an investor. They bought it so that they could sell it at top dollar, or they bought it so they could rent it out. What's the chances of them talking to you and having a bunch of equity and wanting to talk to you about buying it at a discount or buying it for below what it's worth? Very little. Little or no equity. If you don't have equity, you don't have something I want to talk to. We only talk to people with equity. It is the number one lifeblood of our business and being successful. It has to have equity. So we're going to filter out everybody that only has a little bit or no equity. Number three, overpriced because the owner needs top dollar. The owner is moving from Colorado to California, and they need every dime from the Colorado house to buy the house in California. We don't want to talk to them because they need top dollar, and we're going to filter them out. We have a way to filter them out quickly. And all of this is made so that you only talk to the right people and they have the right setup, if that makes sense. Too many repairs for a fast, clean exit. So in other words, the place is a great deal. It makes sense. The area is nice, but there's so much stuff wrong with the property or so much stuff that you got to deal with that it's like, I don't know if I want to fix this up, or I'm going to have to hire a contractor to do this. That becomes something we don't want to look into. Now, let me ask you, everybody here, do these seem like hard to find qualities? Does this seem like I'm doing something that's, oh my goodness, how do you figure that out? No, these are all very sensible, reasonable things, but a lot of investors don't even look at this stuff because they're just focused on a cheap house that they can fix up and make some money. And we don't do any of that, and we still turn a nice profit. So how data helps you pinpoint where deals are. Are you all following along with this? I haven't seen anybody in chat. Just let me know, give me a thumbs up that you can see this and that you're following along. Does it make sense to you about what we're looking for in an area before we even start looking for a house? Is anybody seeing this? I see you guys on here, but I don't know. All right. So data does not replace judgment. Okay. Thank you, Annie. All right. Give me something. Data does not replace judgment. It shows you where to aim. Okay. Thank you, Rashid, making sense. Okay. Data doesn't replace your judgment. It's just going to show you where to aim. We use this to make sure we get the fattest, juiciest deals that are out there, not to that we don't have to make a decision. You still have to use common sense and buy deals. And I'm going to show you how to do that. So one is equity patterns. Who has owned long enough to have room? That's one of the things we look for. Who has owned the property long enough to have room? And they haven't refinanced. Those are all numbers we can find and we can search. I can show you how, and that will help us narrow down who we talk to. Number two is sales activity. Where are buyers already proving demand? We want where buyers want to buy, not because that we want to have competition, but we almost need competition because we need it to show demand. So when we get a deal, we know it can sell quickly and we don't have to fight with convincing somebody to buy it. It should be a matter of just putting it out there at numbers that make sense and it's gone. Okay. Price bands. What areas match realistic quick turn exits? That goes back to what I said about when your properties are priced at $1 million plus or $2 million plus, or maybe $600,000 plus. Yes, you can do a deal, but that's not going to be the most sense for an area. We want areas that are I would say in the $150,000 to the $300,000 range. Now, if you say, well, there are no areas like that by me that are in the $150,000 to $300,000, the first thing I'm going to say is there probably are. You just don't realize it. And we can do a quick analysis and we can see what the average is in your area. And then we can break it down. The process we have, we can break it down by zip code and see where the numbers are and tell you these are the areas you should be looking at. You're not going to buy in every area around you. You're going to buy in very select areas. And then last is property age. Where are livable homes likely outdated? If the house was built in the last 3 years, it's probably not going to fit. Doesn't mean it can't fit, but it's probably not going to fit because it's new construction. They don't have a lot of equity. We're going to focus on the stuff that we know can make sense and it has the best chance of being a deal. The goal is not to analyze forever. And let me be clear about that. Some of the people that work with us, they get into analysis paralysis. They want to analyze something so much because it feels like you're getting work done. That's great that you analyzed it. This analyzing shouldn't take more than on a property. We analyze a deal. It takes us to build out our area. It takes us maybe a day or two. To actually analyze a deal takes us about 5 minutes. And I literally mean that. 5 to 10 minutes on a deal. If you spend more time than that, then you're wasting time. I had a person I was on a call with the other day, and they literally told me, I found a great deal. The numbers make sense. It looks great. This could be a really profitable deal. I said, oh, okay, great. Have you talked to the seller yet? And she said, no, I haven't talked to the seller. Then how do you know it's a deal? You don't even know what they want to sell for. You don't know what they're going to ask for. She's like, I'm doing all my numbers first before I talk to the seller. Why? Why would you do all your numbers? Why would you waste half an hour or an hour or 2 hours doing numbers on a deal and then just for the lady to say, oh, I'm not interested in selling? Where's the sense in that? We gotta do what makes sense. We're here to make money. We're not here to analyze deals. If you want to analyze deals for fun, do it on the weekends after you've made some money. Okay. So let's do another green light zip code example. I'm going to show you this kind of a little bit up close so you can see what this looks like. Green light green light zip code example. Plenty of older homes, strong equity patterns. So it's got strong equity patterns. Homes are livable but dated. Strong equity patterns just means that they're not refinancing every 6 months. They're keeping the mortgage. Homes are livable but dated. So they look livable and everything else, but they're dated. Enough buyer demand to support resale. Price point leaves room for a spread, so they're not super high priced properties. This is our sweet spot, and it has nothing to do with motivation. I haven't said one thing about a motivated seller because in every area there's a motivated seller. But if I find motivated sellers in the green light area, I found a property that makes sense, a seller that's motivated, and an area where there's buyer demand. That's what I want to make a deal. That's going to make me money. This is where quick turn can feel more like strategy than struggle because you're not going to be guessing and cold calling all day to people that don't want to talk to you. You're going to be doing something that's systematic and strategic to actually find deals and start making money. I want you to make money. I do not want you to sit here and love real estate and you're going to do real estate forever and never turn a dollar. I had talked to a person last week. This was a different person, and they said they had been studying real estate for 3 years and had not done a deal yet. What is the point? Why study this stuff for 3 years and never make it? Do you think this is fun and interesting? It is when you're making money. It's like gambling. How fun would a football game be if you weren't gambling? Now, I'm not, for those of you that don't gamble, I guess I don't gamble, but my son and my father, those are two gamblers. But for me, they tell me that when they gamble, the excitement is in the game. Get in here and make some money. That's the goal. That's the excitement. Let's talk about some red light zip code examples. So some stuff we would not want to work with. Red light deals, too few houses to choose from. You're in an area where it's an industrial area and there's only 50 houses in the zip code. I don't want to be there because nobody wants to live there. Very low transaction volume. There's a lot of houses, but nobody's buying them or selling them. Nobody's selling, nobody's buying. Not to say that there's not a deal there, but it's going to be so hard to find it. I don't think I want to spend time there. Homes are too expensive or too unique. This is a big one because when they're too expensive, you can buy them, but they're not going to cut a great deal because they already have very good money and they can wait. They're not in a position where they want to sell or need to sell. Sometimes it is, but it's not going to be your sweet spot. Not enough resale proof. There's not enough proof that these things will resell quickly. If it's not less, it's not saying we got to get rid of the whole area, just that zip code. Too much risk for a beginner first deal. I did a deal with a family that it was 7 sisters that the mother had left them the house, and I had to go find 2 of the sisters lived in 2 different countries in Africa. I had to go find 5 sisters in the US and 2 sisters in Africa that were on completely different time zones that did not like each other. After all of that, they did not like each other. So even once I found them, and if you think it's easy to find somebody in some of these areas, I can't even pronounce this country or whatever, this city she was in. But if you think it's easy to find somebody there and then turn around and tell them that their sister, who they didn't like when they were 12, wants to sell a house, it's hard. I don't want you to do deals that are too tough as a beginner. We can find some easy deals. We can do the complicated deals later. A weak zip code can make a smart person feel like the strategy does not work. And I have this all the time when people just choose the zip codes they think are good areas and they're wondering, why is it so hard to find a deal? Why is it so far hard for me to get somebody to buy this deal that I did find? Why is it so hard to, have a spread on this deal? Because you probably started you didn't score your market and it's probably not a good zip code to be in. Okay. So what type of properties work best? Let's go through this really quickly. Fast, quick term profits usually need boring houses with clear exits. This is very easy. Clean and livable, not destroyed, not luxury, not a giant rehab, middle of the road. That dated, not dead. So they need updates, but the next buyer can see the value. It's not hole in the roof and a crater came through. It's not so bad that you're scared to go in there. Common layout. It's a common looking house. It doesn't have a weird layout or a basement. It doesn't have an attic with a kitchen in it or something like. It doesn't have something weird. It's typical for the area. And then last is clean resale path. You know who the next buyer could be before you buy it. It could be a landlord. It could be somebody that wants to live in it, a new homeowner, like a new family. They want to start a starter home. It should have a clear path. Those are the ones you want to look for. Quick turn is not about the ugliest house. That is not the goal. It's about the cleanest path to profit. That is all I care about. I'm saying profit so many times because that's what matters, not all this other stuff. Everything else is noise, okay? Situations that can create quick turn openings. Let's touch on that really quick. The property matters, but the situation creates the opportunity, okay? The property matters, but the situation is what actually makes us money. The owner may have inherited the property and doesn't want it. That's a very common situation. They may live out of state and they don't want to come back to the state to deal with it. The owner may have been a landlord and got tired of tenants. That is an extremely common situation. If you look in the news, there's a lot of owners that no longer wanted to keep their house and they couldn't sell it and they became unexpected landlords. I forgot the word they used. They said like unintentional landlords, and they become because they rent it out. Those people become really motivated buyers and sellers, and you would never know it. The owner may have started a rehab and ran out of money. I've done a couple like this where they started the rehab and they just ran out of money and they could not get the money together, and now it becomes a debt. You can make some really good money on those deals. The seller values speed, certainty, and clean terms more than squeezing every dollar. This is a lot of people. And here's the thing with all of these. None of these are on a list. There's no list of people that inherited a property and don't want it. There's no list of landlords that are tired. There's a list of landlords, but not landlords that are tired. There's no list of people that started a rehab and ran out of money. We can find these using math without having to know the exact details, and the people that have it will raise their hand, okay? You are not begging for a discount. You are solving a specific real estate problem. That is what's going to make you money, okay? That's why this matters. So I want to touch on this really quickly, how market selection connects to funding. Okay. So when you're saying, I don't know if I can fund a deal, let's talk about that. funding conversations get easier when the deal makes sense on paper. When you're not asking the lender to take some kind of crazy leap, this will make you money. Number one, you're in the right market. There's demand in the market. The lenders can look that up and see it also. Number two, there's a clear deal math. You can show I'm buying it for this. It's worth this right now, and I'm going to sell it for this. They can see that it's not hard to figure out that math. That works for them and it'll work for you. Number three, realistic exit. You don't have to do something crazy to make a profit. I'm just going to sell it. I don't even need to fix it up. So it's not like I'm going to have to make sure a contractor does their work, and it's realistic. The lender can see that. Number four is better funding story. The better your funding story, giving them the right market, clear deal math, realistic exit, that's a great story for the lender. It's easy for them to understand. They will loan you money and they'll give you better terms because they're taking less risk. This makes your job easier. This does not mean every person qualifies for every funding option. It means a better market helps you create a stronger funding conversation and will give you more funding options no matter where you're starting from. Doesn't matter if your credit isn't the best. It doesn't matter if you don't have all the money. The better deal you put together, the more funding options you will have. Okay. What if my market is expensive? Because I know somebody's saying that I'm in an expensive market. Expensive does not always mean impossible, but it does change the filter. Do not force it. Don't force it to try to make it work. Do not chase deals with no spread. Do not ignore buyer demand because you still have to have buyer demand. Do not assume every zip code should work because it won't. And do not just settle for anything to get a deal done, which is a big one because a lot of people just say, I just want to get a deal done. The best way to lose money in real estate is just want to get a deal done, and you will get it done, but you'll lose money. That's the other side that they don't talk about. Instead, let's adjust the search. Look one ring outside the hottest area so we can expand our market just a little bit or go into a little bit closer, maybe another market that's not as high priced. Number two is search for older owner equity pockets. There are places where there are older communities and there's better opportunities there. Compare nearby zip codes before giving up. Don't just say, oh, my area is too expensive. We just got to expand the search a little bit and it will make sense. The answer may not be your whole city, which is where a lot of people come from. It will be just a few specific zip codes, okay? That's going to make the difference. So let's talk about your local market test. Before you spend months chasing houses, ask these 5 questions. This will help make it easier and help you save time and money. Are there enough houses in the zip code to create opportunity? Okay, that's the first question. Number 2, are the price points realistic for a quick turn exit? So are the price points something that makes sense for somebody to buy, meaning a first-time home buyer, an investor, a landlord, somebody? Number 3, are there older homeowners with equity in that area? Number 4, are buyers actively purchasing similar homes? So people buying in that area with those kind of homes. Number 4, can the deal story make sense to a funding source? Now, these are the questions to ask. Now, you might say, if you cannot answer these, you are not investing yet, you're guessing. You might say, well, how do I answer these? We have a specific mathematical process to answer these questions and more before you ever market to find a deal. So if you are interested in this, if this is something you want to learn or see how the process looks in your area, what I want you to do is set up an audit call with me. What it is we help, one helps seeing whether your local market can actually make you money or should you pick another market. Set up a call. On the call, what we'll do is we'll look at your local zip codes and look at the deal potential. I'll be able to show you, hey, based on where you're at, this is an area you probably should focus on, or this is an area you probably should not. And we only need to ask 2 questions, and I'll show you how to figure that out really quickly. Whether your area has green light opportunities. That's something that you can answer based on knowing the area. If you don't know the area, I'll show you where you can find this out really easy. Number 3, how market selection connects to your funding path. We'll show you based on your market what funding path is likely going to work for you, okay? And how you can get our help and our system. So we'll talk about all of that on the call. It is a no pressure call, so we'll talk to you, and we'll also talk to you about what your next 90 days should look like to get started. We are coming into the summer. This is the time to take opportunity and go at it because this is when money is made. We're excited about this summer. I think there's going to be a lot of deals. People are going to talk about, I don't know about the economy, the interest rates. That is not going to stop deals from happening. Trust me, deals happen in the worst of times and in the best of times. The only thing you have to watch for is being in the best of times and then it's switching to the worst of times while you're still holding the property. Other than that, you won't lose money. So schedule your one-on-one call, market call, audit call with me. You'll talk to me directly. If you want that link, I will put it in the chat. I'll give it to you directly. Just let me know in the chat. Say, hey, I'm interested. I want to set up a call. I will set you up. You'll talk with me directly, and we'll kind of show you the process and what's involved. This is a real business. I don't know how else to tell you. I don't know what you're looking at previously, but this is a real business. Okay, I'll definitely, let me get 1 second. What did I do with my, okay, here it is. All right, so I'm going to send, if you're interested, I'm going to send you a direct message with the link. Here on this link, you can simply answer the questions and it will set you up with the call from my scheduler to schedule with me. Spots are filling up because we get calls set up all the time. And I deal with people directly because ultimately, I want you to invest in commercial real estate with me. We do commercial real estate as well, and we do it as a group. So we invest in strip malls, mobile home parks, and self-storage units. And I want you to invest with me. I'm always looking for investors and trying to build up a group. And if I show you how to make money in this, then we can actually work together in commercial and do bigger deals. So if that's interesting to you, then let me know. Annie, no problem. I will get you the link. Check your messages. So you all should have it. Rashid, you should have it. Annie, you should have a link with the questions. If you don't have it, let me know. If you came in late or you did not catch all of this call, then by all means, just I will send a replay to everybody that registered today. I know not everybody can get on the call, but I'll send you a link so that you can watch the replay. Okay, good. I'm glad you got it, Rashid. Okay, Annie, did you get it? Let me know if you got it. And then I'll get you guys the replay. Now, what I usually do at this time is I will open it up for questions about what we talked about. Did you enjoy this training? Do you think this is helpful to you? Is this going to kind of give you some idea of what you should be looking at? Again, it's not a full strategy of how to make money in real estate, but it's the start of what you should be looking at because a lot of people get confused on what they should even be looking at in real estate, and it can hurt them. So does anybody have any questions? Okay, good. You got it, Annie. Very good. Terrence, I got you. I will send it to you right now. And when I send it to you, just let me know that you got it. I just sent it to you, Terrence, and let me know that you got it. Rashid, yeah, the philosophy makes sense. It's not tough. Listen, this business has a lot of different things that are noise. People are telling you to buy land and tax deeds and Airbnb. There's always a flavor of the month of what you should do in real estate. I have been doing this strategy for over 10 years. It does not have to be all these different things. It can literally be one strategy. You don't listen. When you go to work, how would you like it if they told you today you're going to be a janitor? Tomorrow you're going to be a lion tamer. The next day you're going to be the guy selling popcorn. The next day you're going to be a electrical engineer. You don't jump around jobs like that. You do one job and you just get to do it well. It's the same way with business. You don't have to jump around and do 50 different strategies in real estate. You can do, yes, that's true. You can do one strategy, make a lot of money, and then live the rest of your life. And really, do you want to do all of that stuff? Do you want to keep switching it up and doing how many business owners do you know that say, I do 16 things? I do electrical engineering. I do auto maintenance. I do this, that. If they aren't making any money. Because they're doing too much. They're spread too thin. We don't need to do all of this stuff. And one of the things that messed me up when I started is I became a landlord. I thought being a landlord was sit back and just collect the rent. If you've ever been a landlord, it is nothing farther from the truth. Tenants are calling you. And here's the thing. It's relative to how much money you make. If you make a lot of money with rentals, I've gotten to a point where I've made about $40,000 a month coming in from my rentals. And I was swamped with work. I've also had months where I made $800 a month as a rental. And I didn't have as much work, but I didn't make that much money. And even then, with the $800, I did something almost every month for that $800, just with repairs, answering phone calls, or whatever. This is a business you can run, and you can run it from anywhere. You can run the business in Texas, in Hawaii. You can be, as long as you have internet access and you have access to a phone or an internet phone or a cell phone, you can run this entire business. You don't have to be in your area. Not saying you got to be all over the country. I choose to be in one area, and I think you should too. I don't think you need to be all over the country. You don't need to know the whole country. You just need to have one area and be the one that does this strategy in your area. And you're not going to be fighting with the rehabbers and the landlords. You're going to be a supplier for some rehabbers and some landlords and some regular homeowners. At the end of the day, our goal is to get to the check. Does that make sense? That's the goal. It is not all this other stuff. All this other stuff is noise. If you can't make a consistent check, let me be clear, not just a check, a consistent check from this business, you're doing too much or you're not doing it right. And when I say consistent check, it might not be every month you get a check, but it might be this month you get a check for 40,000. Next month you get a check for 80,000. Maybe then the next month you don't get a check, but then the next month after that you get a check for 65,000. It's enough money that you can float yourself through it and be okay. That's consistent money to me. I don't expect to get a check every month. Sometimes I do, and it's very nice when I do, but at the same time, I get checks that are large enough that when I don't get a check next month, I'm okay. I can still do what I need to do. Okay? I tried to explain why people sell property like this because when I tell people the numbers of how we do deals, when I put the replay out, there's another video underneath the replay. You'll see it tomorrow, and it talks about real world quick turn examples. And in that example, I actually went and showed you some of the properties that we did and what we bought it for, what was the situation, and what we sold it for, and how we made a profit. And we made, I want to say in that 4-month period, we made about $300,000. 300, maybe 400,000, 300 and something thousand. And let's say I didn't do anything for the rest of the year. If I did, no, we are not. She said, are we assigning contracts? So no, we are not assigning contracts. We are buying the property and owning the property and then selling it. Now you might say, well, so I heard assigning contracts is easier. Assigning contracts is safer because you don't have any skin in the game. If they cut you out of the deal, the only thing you lose is the money that you could make. With us, there is no cutting us out of the deal because we own the property. Now, you might be saying, well, I don't have the credit or I don't have the money to buy a house. I can show you how to start. Let me explain. I'm not going to give you the fluff and anybody can do it. You just got to borrow other people's money. I'm going to give you the real answers. If you don't have the money or credit, you can still do this, but you will start at a different place. When you don't have the money or credit, we will start you at getting just one deal done. That is the process that you have to do. Get one deal done. Turn about a $35,000 or $40,000 profit, and then don't take that money and rush off to Vegas or do something crazy. Instead, take that money and invest it into your business to now make it a business where you're doing this on a consistent basis. That is how you'd get over if you don't have the money or credit. Now, if you have money or credit, great, because now I can show you how to build it as an actual business ongoing that's constantly buying and constantly selling. And you don't have to have all the money. In fact, one of the lenders that we use does no down payment financing. So they will finance 100% of the purchase price and 100% of the fix up, even though we don't do fix up. And you only have to come to closing with the title fees, which is a couple of $1,000s. If you're buying a $200,000 house, the title fees might be $3,500. So you're not going to have, if you can't come up with $3,500, borrow it. Because you're going to take that $3,500, buy that property, and then you're going to turn around and sell that property and make $50,000, $60,000 and pay that person back with interest and then keep on going. Okay? So this is not trickery. Everybody can do this. It's a matter of if you will do this. If you follow what I'm telling you to do, if you follow the steps, you will have success. If you go off and do some of it and then go on some weird tangent and start talking to me about government contracted Airbnbs that are sold at a people come to me with all kinds of weird stuff and they're like, yeah, I got veteran bedrooms with Airbnb. And then did you know you can take a veteran bedroom and an Airbnb and put them together and get a Section 8 tenant with the, sir, I don't want to know how to do all that. I make money the way I make money. If you think this tying these government contracts together is going to make you, by all means, that's fine. But I'm telling you, this is a consistent process that makes money. It's not a sexy business. It's not every day is something great. It's going to be a consistent business. You be consistent with it. It will consistently make you money. All right. Does that sound like something you're interested in? Has everybody that wants to set up a call with me gotten the link? I'm just going to put it here. If you want the link, it is in the chat. You can click on that. You have to answer a couple of questions. And then when you answer those questions, you will be able to set up a call with me and you will talk to me. It's about a 30-minute call. We get down to the nitty gritty. I will be very straightforward with you. And at the end, if it makes sense, we'll work together. If it doesn't make sense, no harm, no foul. I have some other resources I can share with you, and I'll talk to you about those. But if you're interested in this and you're serious, and I believe you are because you stayed on this call this whole time, Rashid, don't just get excited. Take some action. Let's actually do this call and let's see what you're at and let's get you started. Okay. I promise you, no one that has gotten into my programs or learned from us has said, oh, it wasn't worth the value. Now, a lot of them have said, oh, I should have did this faster. I was kind of hard headed. Don't be hard headed, man. Come in stupid. That's the best answer I can give you. I'm gonna give you this quick story before I go. When I was young and I started out in real estate, I had bought my first two flat building. I thought I was the man. I thought I was doing big things. And I went to a real estate seminar and they had a breakfast before the real estate seminar. And on that breakfast, all the people that were at the seminar were sitting down to have breakfast. And I sat down and this older gentleman came and sat down next to me. He's an older guy. He looked like he was maybe in his 60s. And he said, so we started talking, and I'm young, I'm in my 20s. So we started talking, and he said, well, what do you do in real estate? I said, oh, man, I don't want to brag, but I said, I got a two flat. I own a two flat. And he said, I said, yeah, so I got a two flat. I'm going to buy some more buildings, and I own all these buildings. And I was like, yeah, so that's me. I said, what do you do? He said, oh, I build communities. He said, I build like 150 house communities. He said, we've done in 16 different states, and I shut up. It was a great lesson because I learned that some people don't come in there thinking you know everything. Come in there stupid and come to learn. Come to learn. Come to listen. And you will get so much more out of it. All right. Okay, guys, that's it for tonight. I got to go. I look forward to working with you guys, and I will see you next time. As always, happy hunting. Have a good night, everybody. See you soon.